Welcome to World Finance Brief. Okay, so let's just jump right into it because a major policy bombshell just dropped, seemingly out of nowhere. And it could affect millions of us, right, in our wallets. Former President Donald Trump has announced a plan to cap credit card interest rates, and it has sparked a fierce debate. So is this much-needed relief for consumers, or is it a really risky economic gamble? Let's dig in and break it all down.
To really get why this is such a massive deal, you've got to start with this number. Ready for this? $1.17 trillion. Yeah, you heard that right. Trillion with a T. That is the staggering, record-breaking amount of credit card debt that Americans were holding in late 2024. And that huge number is the entire backdrop for this whole proposal.
Now, this whole idea didn't just pop up overnight. Not at all. The pressure's been building for a while now. I mean, you see that record debt number, and then boom, a bipartisan bill to cap rates actually gets introduced in Congress, but it stalls out, goes nowhere. And it's that political gridlock that seems to have led the president to take this pretty unconventional path, right? Making a huge policy announcement on social media.
All right, so let's get into the nitty-gritty. What exactly is this proposal? What would a 10% cap actually mean? And here it is, the direct quote from the announcement. And listen to the language here. It is strong. He's accusing companies of, quote, ripping off the public, talking about rates of 20–30% or even more. I mean, there's no mistaking how this is being framed. It's a direct intervention that's meant to protect the American consumer.
So just to make sure we're all on the same page, what is an interest rate cap? It's pretty simple, really. It's just a legal limit, a ceiling, on how much interest a lender can charge you. In this specific proposal, that limit would be set at 10%, and it would last for 1 year. That is a huge, huge change from the average rates we see today.
Okay, so you can bet a move like this has some powerful supporters. And their whole argument, really, it centers on one main idea: giving immediate, real relief to people who feel like they are just drowning in high-interest debt.
And that support came out fast. I mean, almost immediately. Senator Josh Hawley, who you might remember co-sponsored that earlier bill, he jumped right on it with this super enthusiastic endorsement. It's a pretty clear signal that, yeah, there is definitely a political appetite for this kind of thing.
So for the folks who support this, it really boils down to a few key things. They look at today's super high credit card rates and they don't see fair business. They see something more like, and this is their language, extortion and loan sharking. They think a cap would give that desperately needed relief, directly tackle that record debt we talked about, and, it also fulfills a campaign promise. But, for every action, there's a reaction. And the financial industry, along with a lot of economists, they are sounding the alarm bells big time. They're warning about some really serious unintended consequences. So let's take a look at their side of the argument. And this statement, which came from all the major banking associations, it gets right to the heart of their biggest fear. They're basically saying that a 10% cap, instead of being a lifeline, would be, and this is their word, devastating. Why? Because it would cut off credit for the exact same people it's trying to help. So what would that devastating impact actually look like? Well, the critics break it down like this. They warn that if banks can't charge higher interest rates to cover the risk of lending to people with, say, lower credit scores, that's what the industry calls subprime credit risk. Well, then they just won't lend to them, period. And that could mean canceled cards, less access to credit when you need it most, and it might even push people toward way riskier options, like those unregulated payday loans. And right here, this is the fundamental conflict, isn't it? You have two completely opposite views. Is this policy a shield to protect families from predatory rates? Or is it a cage that ends up locking people out of the credit system entirely? It's a classic policy dilemma, and there is just no easy answer. But wait, there's another layer to this whole thing. Beyond the economic debate, you've got pure political skepticism. Take Senator Elizabeth Warren, for example. She's been a tough critic of big banks for a long time, and she's basically questioning if this is even a serious proposal. Her point is, look, without an actual bill, without a push for real legislation, is this just talk? Is it just a way to score political points without actually having to get something passed through Congress? So we've laid out the facts, we've looked at the arguments from both sides, even the political maneuvering. Now we get to the most important part. What do you think?
And this really is the ultimate question, isn't it? Is a 10% cap a desperately needed lifeline for millions of Americans buried in debt? Or is it a reckless policy that's going to cause a credit crunch, hurt the most vulnerable people, and maybe even destabilize the whole market?
There are really strong, compelling arguments on both sides here.
So we want to hear from you. What's your take? Is this a good idea? A terrible idea? Jump into the comments below and let us know what you think.
And hey, for more explainers that break down the biggest stories in finance and economics, make sure you subscribe to World Finance Brief. Thanks so much for watching.